one alive. You have to know that I'm back from a couple of weeks on a boat, sailing
Okay.
boat, holidays, everything fine, great. Italy, Italian food, Italian beaches, everything great. And then as soon as I came back here in Brighton, oh my God, I spin everywhere. So it's like 3 days that I'm land sick. I everything move. It's a weird feeling.
Oh, wow.
I feel like, when you're an entrepreneur, it's like that everything is not standing still. You're always trying to catch
Right.
up. I don't know. It's a weird feeling. But
It's a
anyway,
good analogy.
it's crazy. It's crazy. How do you see, by the way, this situation, macroeconomic environment for all entrepreneurs out there? Every day there are some horrible news from inflation, war, and things. But what's your take of this moment?
Well, I think a lot of it is about what stage you're at as an entrepreneur. So, I don't want to downplay it too much. Like if you're an entrepreneur that's been building a business for, 8 years, 9 years, and you were planning to do an IPO this year, then obviously the macro situation is pretty grim. And there's not going to be, I think, anything like the number of great IPOs this year that there were in 2021. On the other hand, the thing that I do think is oversold is if you're an entrepreneur at the very start of your journey, in a way, the good news is that, by the time you're big enough for the macro situation to be your biggest worry, that means you've probably had quite a lot of success along the way.
Yeah.
And what I mean by that is at the start, really all the risk is micro. Like, are you actually building something that people want? Are you actually building something that customers love enough to pay for? Have you found the right way to reach those customers? All these like micro questions. You're actually very resilient to inflation, recession. Like these are terrible things for the overall economy. But as an entrepreneur at the start of your journey, you're actually you're such a tiny boat on the like almost like you can ride a big wave and not even notice whether it hits kind of a couple of meters above the surface.
Yeah, that's a good point because at the end, if you build the right product, solve the right problem for a very specific audience. I mean, I was just to give you an example. I was going into this world of boats, yachts, and it's an amazing opportunity there that is totally unsensitive to the macro environment.
Right.
That target audience, I mean, that doesn't change anything if the macro environment is bad or not. So it's interesting how also based on the sector that you choose, there is a huge demand. What kind of sectors do you see in this moment that have like a great amount of requests for I don't know, employers, or there is a lack of talents? Do you see any sector in particular?
Well, I think so. Entrepreneur First, the companies we're backing are largely software companies, and I think what's nice about software is even though software has taken a real beating in the market, on the public markets, if you'd put all your money into a software ETF in November, you'd be down a lot. I mean, you would be down 50 or 60%. But again, like if you zoom right out, I think what's exciting is that when you ask people, do you think software will be more important or less important as a proportion of the economy 10 years from now? I think almost no one is going to tell you less important, right? It's just, and so as a result, what I would say is, speaking just about the part of the market I know, I think, in the short run, this year, I imagine there may be net layoffs in software. I don't know if that's true because actually, even as I say, I'm thinking, the most resilient companies through this cycle have been the really big software companies, the Googles, etc. But, let's take for sake of argument, even if this year was a net layoff year in software, it's very hard to imagine it's going to be a net layoff decade. In fact, the opposite, right? And so I do think that for entrepreneurs in particular, one of the reasons not to get too bogged down in the in the macro environment, to worry about inflation and global supply chains, is that if you're trying to do anything very meaningful, whether that's building a company or even planning a career as a young person, you really want to optimize for the long run. You want to optimize for a long enough period of time that advantages can really compound. And so, the advice I would give to anyone, whether looking for a job or seeking capital, is try and take a 10-year view. Like, what is the bet that you're going to make today that is likely to pay off over a decade, rather than worrying about whether this year, kind of demand is up or down, or inflation is, pulling on, this, particular input good or not. I think it's very easy to constantly do the micro optimization and actually miss the big picture.
Got it. I was watching the other day an interview to one guy. His name is Level CEO. I don't know if you're familiar with him. He does several websites, digital nomads, remote which is job boards for remote working. And by the way, I think he has like $3.4 million revenues a year, but he's basically alone. So that's an interesting concept, And I was thinking about him because I have a friend who just did a big exit, but unfortunately it's like diluted to, 1.3%. And after 15 years, he is earning less than this guy who is alone. So it's a very interesting scenario. But in one of these job boards, you see so many requests for remote working and like coders, of course, tons of requests for coders. Is it any specific skill that you see in great demand in this moment or in the next few years?
Well, I think what's interesting is, yes, there are always fashions in like what's popular. So like, because of the huge amount of capital and talent that's flowed into crypto Web3 stuff over the last couple of years, for example, salaries for people who can program smart contracts, on the Ethereum blockchain or other blockchains has been, it's been super, super high. So Solidity and other languages and technologies, and they're probably good bets, I would guess, to make as a person looking to acquire skills. The interesting thing, though, again, is like, I think the really valuable thing is actually the way of thinking, the kind of like computational thinking, having the building blocks across technologies such that you can pick up whatever is new and needed. So, like right now, for example, we see a ton of demand, like massive excess demand, maybe falling now because of the crash for sort of Web3 related technologies. Still constant demand for anything related to machine learning engineering, DevOps, like all these things that are now sort of parts of the core building blocks of so many companies. But I think in general, the thing that really good companies value most of all in technical talent is the ability to adapt. Again, like if you just think how long a career is relative to how quickly technology changes these days, the joke is, you sometimes see these posts on Twitter where you get like a language that has only come to prominence in the last 2 years, and the creator of the language posts as a joke like a screenshot of a job advert asking for like 5 years of experience, and it's like, well, I invented the language and I don't have 5 years of experience in it. And I think that's like a really important lesson for people, is that it's not about like a particular functional skill, like of a particular type. It's the ability to adapt to a very fast changing landscape, and to thrive in environments that are hard to predict. Like, who knows what will be the most in-demand thing 5 years from now?
Yeah, that's a good point. Matt, let's talk about entrepreneur first. I was curious first about all the investors that you managed to have. I was checking the list, and there are incredible names. Only Iron Man and Spider-Man are missing. Everyone else is there. So it's an impressive list of investors. So I was curious to understand the behind the scenes of building such a big fund with such an amazing network of people. So take us a bit back in time and help us to understand how did you manage to build it up?
Yeah, so we started 2021 knowing that we needed to go out and raise a fund in 2021. We were coming to the end of the previous fund that we'd been investing from, and we were very fortunate partly because the performance had been good, to have the option to try something quite radical, which was, rather than raising the capital as a traditional venture fund, to raise it as an investment into our management company, to give us the freedom and flexibility to deploy some of that into investments, but also to invest it in Entrepreneur First itself, to build out our own infrastructure and operations. And I think not only do I think that's the right structure for the company and what we want to do, but we found that actually by doing something radically different, that's very different from 99.5% of venture funds, it actually allowed us to have, I think, a set of conversations with investors who were attracted to doing something differently. So a lot of the people who were in that, in that round were people we knew already one way or another, but not necessarily as investors in EF. So, I think some of the people we listed were, John and Patrick Collison, the founders of Stripe, Reid Hoffman, founder of LinkedIn, Matt Mullenweg, founder of WordPress, Tavat Henriquez, founder of Wise. So some of those people like Tavat and Reid were previous investors with us. Some like Patrick and John were people we'd known in other contexts. But actually having this opportunity to say, look, we've got this structure in mind. We think it's going to allow us to build an enduring institution, to do things differently, and really to innovate on venture capital itself. I think, as well as the returns, that was a very attractive.
Very attractive. Now, sorry, Matt, help me understand why it's different from a normal venture fund. Because usually a fund raise money and then deploy the money, and in 10 years' time, whatever,
exactly,
a couple of unicorn, and then next fund, something like that.
Yeah, so let's use standard model. Two people decide to raise a venture fund. They go out and they raise 50 million euros, and basically the deal they make with the investors in that fund is every year we'll charge you 2% of the amount committed, and we'll spend that on the operating costs of the fund, and then everything else we'll invest directly in companies. And at the end of the 10 years. Hopefully those companies are valuable. We'll pay you back all the money we took out as fees, plus all the money we invested. And then once you've made a return, we'll share the profits. That's the standard venture model. Works super well if you basically are doing the same thing that venture capitalists have been doing for the last 50 years, which is swapping cash for equity at a market price. What we do at Entrepreneur First is very different. So we don't swap cash for equity at a market price. In fact, what we're mainly offering as a value proposition to the entrepreneurs that join our community is not the cash, but actually finding a co-founder, finding an exceptional co-founder who will build a business from scratch with you. And so you can think of Entrepreneur First as being less of a fund and more of almost like a workshop where we're in a community, where we're actually building with the founders from scratch. So what that means is, relative to a normal venture fund, we want to spend a lot more on our operations than a normal venture fund. And we want to deploy a lot less of the total capital we raise directly into companies than we would in a normal venture fund. Now, if you do that through a traditional model, if you go back to the model I just described, the problem is what you're then saying to your investors is, we're not going to charge you a 2% management fee. We're going to charge you a 10% management fee. And guess what? Not very popular. Now, why would anyone accept this deal at all? On the investor side? Well, the pitch to them is, because we do so much work for our entrepreneurs, because we find them a co-founder who they wouldn't find themselves, and who makes a sort of binary difference to their success, as in a 0 to 1 difference. Entrepreneurs are willing to give us equity at a price that doesn't reflect, the true market value on strictly cash terms, because they value all the non-cash things we do very highly. And so actually, if you're a rational investor, you should be willing to let us spend a lot more money on operating costs and a lot less money on investments, because the overall equity we generate is worth a lot more than if we were putting all that money into investments. Trouble is, it's quite hard to do that in a normal fund structure. That's not what they're designed to do. In fact, if you think about a vehicle that's designed to take capital from investors and spend it on operations, what you're talking about is a normal company. That's what normal startups do, is they raise capital from investors, and then they use that to hire people and to find a repeatable and scalable model that generates more value than it costs. And our pitch last year to John, Patrick, Tavat, all these people was, that's what EF is. We're finding a repeatable and scalable way to build businesses from scratch, for far less than it costs to make them. As in, they're valued at far more than the input costs. So that's the difference. It's like thinking like a company rather than thinking purely like a fund.
But if you compare it with the classic Y Combinator and so on, apart from finding a co-founder, which is already amazing, because I was thinking, if I tomorrow tell you, look, Matt, I want to launch a company for all the bold people in the world, and I need a bold co-founder, you know, and if you find the right co-founder, is a great asset, of course, but it's a great value. But there is like a journey, like Y Combinator style, where you start to build a prototype together, or you vet the select. How does it work?
Yeah, no, you're exactly right. So if you already have a team and an idea and probably an early version of the product, somewhere like Y Combinator is ideal. What they do, as you said, is like they take you from that team idea product, 13 weeks, and at the end of it, hopefully you have a business with some traction, and you can go and use their network to raise seed capital. EF does do that, but we don't accept companies that already have a team and an idea and a product. So you could think of EF starting 3 or even 6 months earlier than Y Combinator. So it starts not with companies, but with people. And the kind of unit that applies to EF is not the company, but an individual. And so our pitch really is, if you're an exceptional person, if you're exceptionally talented in some way, you want to build a company, you want to start a startup, but you don't yet know who with, you don't have someone in your network, then EF is the place to come. We think it's the best place in the world to go from 0 to 1, from being an individual pre-company to having a funded company. Now, once we fund your company, then we do all those other things too, of helping you, raise seed capital, get traction, etc. But the really unique bit of EF, the bit that's different from, YC and all those other programs, is just being willing to start pre-company and build companies from scratch in collaboration with founders.
Got it. I've built. I turned 50. By the way, tomorrow I turn 50, to be precise. So I'm officially old.
Happy birthday!
I'm an old YouTuber, but also I'm an old small entrepreneur, and I've launched a lot of startups in my life, and I had a lot of different co-founders. And I have a lot of different shareholders and investors. And usually it's a big pain. That was my experience, for the last 20 years.
Yeah.
It's like a marriage, I had a co-founder for several years on a couple of companies. And it was like a marriage, sometimes it's good, sometimes it's bad. Then you have problems, you try to solve it. So it's very, very complicated to find the right co-founder, at least in my experience. And I was wondering if you found some sort of good guidelines to match the right person, because there is a lot of psychology
100%.
there. Maybe one is a technically perfect co-founder, but the psychology that doesn't fit. So it's a very complicated job. It's a dating agency, basically, and it's very difficult to do it. So I was wondering if you were able to crack the code of matching co-founders.
You're absolutely right. This is such an important point. So, when we started Entrepreneur First, 10 years ago, the most controversial bit about it, the bit that people thought was crazy, was you would start a company with a stranger. Like, isn't it hard enough to make co-founding relationships work, even if you've known this person for years? Why would you go start a company with a stranger? And, our belief was, I suppose, 2 things. One, that if that wasn't possible, if you really only could start companies with people you've known for years, that was basically saying that like 99% of the world's population, the 99% that doesn't have the ideal co-founder in their own network already, shouldn't start companies, which to me, that just seems like a crazy intuition. Like, my intuition is that there should be many more entrepreneurs in the world. Like, we shouldn't be trying to limit who can do it. We should be trying to blow that open. The second thing, as you get, is, what if there was a way to actually really test and validate a co-founder relationship up front, such that you could have very high confidence that this was going to be a fruitful relationship that was going to last years. And one of the things we learned along the way is that actually the whole idea that you should start a company with a friend or someone you know really well is sort of actually a crutch to avoid having to really test and interrogate whether a relationship is the right one. I do agree that if you're not going to test the relationship, if you're just going to jump in and see what happens, then, all other things equal, you probably are better off with a friend than a stranger. But actually, I just think that's the wrong starting point. As you say, like, you wouldn't marry someone who you'd never been on a date with, or most people wouldn't. Most people want to spend a pretty long period of time getting to know someone, right? And so what we've developed over the years at EF is not like a test in the sense of like, people fill in a form and we find the right match for them. It's not analytical, it's experiential. What we've learned is, how can you simulate the stresses and strains, the ups and the downs of a co-founder relationship in such a short period of time, weeks or even days, that by the end of 3 months, you feel willing to say, yeah, I want to start a company with this person. I want to go all in on this person. I can imagine spending the next 10 years of my life doing that. I think sometimes outside in, maybe it looks at like EF is like, oh, it's just a long, it's a community of people. It's a long list and I decide who to co-found with. Now that's a tiny part of EF. Yeah, like sure, it matters who we select to be in the community, but arguably the most important part is actually the methodology of how you test. And like, there are some bits that are obvious and some bits that are more nuanced, but the core of it is just the intuition that you actually just need to get started.
Right.
The best way to find out if someone is a good co-founder for you is to actually try and build something together, not as a game or as a sort of experiment, but just get started. What we find is that, in the 12-week period that people have at EF to test whether someone is right for them, they typically, even the successful ones, the ones that we fund and go on to raise money, they typically have gone through like 2 or 3 different combinations of people before they settled. And so like, if you've only got 12 weeks, you better be able to reach a conclusion, or at least like a pretty strong belief about whether someone's the right person very quickly. And that's what the whole EF infrastructure is designed to support, like making the decision very, very quickly whether someone is the right person for you.
How does it work, the process? I submit an application, I imagine, and do you have like a database of possible co-founders? How does it work? Starting when you send me an email and say, all right, Monty, you in.
Right.
Come this day in this place, and I'll come.
Right.
What happened?
Yeah, so it's cohort based. So exactly as you say, you submit an application. We're very lucky these days. EF is very popular, and so it's very selective. We get about 20,000 applications a year, and we select a few hundred of those. So I think the acceptance rate it depends a bit by site, but it's like 2 to 4%. So it's very, very tough to get in, which is both a feature and a bug. Like obviously we want entrepreneurship to be accessible, but what it does mean is if you're invited to join that cohort, that everyone else in that cohort has had to come through the same selection process, and they must be very good to be there, which is key to making the whole thing work. So let's say you join the program, day one, there's probably 50 people, varies a bit, sort of 40 in some sites, up to about 75 in others, but roughly 50 people in your cohort. And crucially, not only did everyone get through the selection process, but everyone has had to give something up to be there. That's a really key part of making it work. It's not a part-time program. It's not something where you can have something on the side. You have to quit your job or whatever it is you're doing and be available full-time, 100% committed on the Monday morning that it starts. And so what we actually ask, we typically take people away either for a weekend or, just a day about 3 or 4 weeks before the program starts, so that the ice is already broken socially before that Monday morning. Like people have already started to get to know each other. What we say to people is you should come into that first week, with a short list of people that you think, based on what you've read about them, you'll have seen their profiles, you've seen what they say their skills are and their interests are. You come into that first week with a short list of people you think might be a good fit. And the moment you enter the building on Monday morning, the clock is ticking. You've got 12 weeks. In fact, you've actually only got 8 weeks to form a team and then a further 4 weeks to make progress as a team before we evaluate whether or not we're going to invest. And so what we say is, don't spend this week kind of sitting around having coffees, getting to know people. Pick someone, get started, and see what happens. Now, the key to making EF work, the reason it has been successful, is not because we, like have some algorithm that says like, yes, Monty and Matt will be a good pair, or no, they won't. It's because what we've done in creating these cohorts is it's like a little bubble where social norms are inverted from where they normally are in the outside world. So if you and I were to decide to start a company, in the outside world, our bar for getting into a team and being like, yeah, let's say we're going to be co-founders would be quite high. Like if we were going to tell our, our wives or our kids that we're going to start a company, like we'd have to be pretty sure, right?
Yeah.
The flip side of that is that means that the bar to then saying to you, hey, Monty, I'm really sorry, but I don't think this is going to work out. We just don't work that well together. We're not being very productive. That's also a high bar. Like it's super embarrassing to say that.
Yeah.
If we've gone through the process in the outside world of deciding to work together, getting out is really hard. EF takes those two points, getting in and getting out, and completely reverses the association. So instead of it being a high bar to get into a team and a high bar to get out, at EF, during that 8-week period at the start, it's a really low bar to decide to work together, but also a low bar to decide to stop working together. So if you wanted to say to me 12 hours after we start working, you know what, Matt, I just don't think this is going to work out. We've tried really hard to destigmatize that, to make that a really normal thing. I can't take it personally, and no one else in the cohort thinks that it means anything about me. In fact, what we do at EF is when a team breaks up, we enforce public celebration of that.
Right.
It goes on the cohort Slack channel, and everyone has to respond to it. Everyone has to share their learnings, and then you just move on. And what that means is people can iterate very, very quickly. And the moment it feels like, we're hitting a brick wall or we're not as productive as we could be, cool, go back into the pool, like create liquidity in that pool so that other people can team up. People go through this process and say for 8 weeks. At the end of 8 weeks, typically about 80% of the people that joined have found someone that they feel, ready to commit to.
Interesting. Well, how do you solve a situation where you have a bunch of people? And I was thinking, for instance, the other day I went to the school of one of my children, and some kids are clearly better in some topics. I don't know, math. There are a couple of kids. You immediately see they're math genius, or like playing piano. There is one kid who is unbelievable and is 8 years old.
Yeah.
So as soon as you see them, you think, oh, I want to go found a company with him. If you want to do like a piano company, I want him.
Right.
And everyone wants him. So how do you solve this imbalance maybe when you have different people, but maybe you have a young Elon Musk in the bunch and everyone say, oh, I want Elon as a co-founder. Is it a problem or not?
I think the reason it's not a problem is that I think the founders' preferences are actually really heterogeneous. Like, like the piano example is a good one. We haven't ever done a piano company, but, there's probably someone who's absolutely brilliant at the piano and then someone who's really brilliant at the guitar. But actually the people that want to start a piano company and people that want to start a guitar company are really different. And so actually what you find is that because skills vary, skills are very diverse in a cohort and preferences are very diverse. For sure, there are some people that are very popular and people would love to have a chance to work with. But actually, in general, people gravitate pretty quickly to people that share their preferences. And of course, one of the hard things about building a startup in general is that if your idea is obvious or like generally accepted as a good idea, probably isn't a very good idea. And so like most startups have this like contrarian belief at the core of them. And so one of the ways that team building works at EF is if you have a belief about how the world's going to change and what companies that kind of makes possible, the chances of everyone agreeing with that being like, yeah, they're actually quite slim. Most startups have some crazy belief at the core. And so what the nice thing is you get this natural filtering by who agrees on the crazy hunch at the heart of each idea. And so, for sure, I think it's a very intense experience going through this matching process. And, we try to be very transparent about that. I think it's like there's lots of ups and downs emotionally through that. But in general, I think it's a surprisingly efficient way. And as I said, most people do find a co-founder that they want to commit to.
Interesting. How many people are there usually?
Usually about 50.
Okay, so 50 people. So it's not a huge amount of people. It's not even a small group because 50 people is already an interesting size.
Yeah, it's designed to be enough that you have, like real options, but not so much that it's overwhelming. Like we want everyone to feel that they did sort of know everyone in the cohort at least a bit.
Got it. And do you influence in any way the topics? I mean, you say, look, AI startups or sport startups, or I don't know, or you meet and you try to find your.
We don't in general. One thing I've learned is that one of the most important predictors of success in a company is what we would call founder idea fit, meaning there's no such thing as a generically good idea or a generically good founder. Magic happens when the right founder starts the right idea. And so one thing we've learned is, even if I think I've got a really good idea that I would like to give to someone, it's kind of hard to do that. Typically, like, ideas have to come organically out of a founder's what we call edge, meaning their personal competitive advantage. And so almost all our programs are generalist programs where people can start any company within the broad technology field. The one exception is we do have in the autumn a specialist Web3 program starting in London, and that's just because partly because we have this great partnership with the Tezos Foundation behind one of the big cryptocurrencies, and partly because we have so much demand right now for Web3, and so it sort of made sense to create a program for people just who want to focus in that area. But in general, we say, the ideas will come out of the combination of co-founders with diverse skills working together.
Right. Very interesting. By the way, Web3, I've interviewed so many people. I mean, in general, in the crypto world, from Michael Saylor, CZ from Binance. I mean, so many people. And what I notice is that if I compare it with my old way to build a startup 20 years ago, now is the geography is definitely less important. In my days in Italy, it was Silicon Valley. That's it. Italy was nothing. And now you see even countries like Italy or other small countries, you start to get companies that you think, wow, how did they do it?
Yeah.
And geography is less relevant. And also the co-founders, they are maybe never met. They work remotely. So it's a very interesting new mix, new combination in this Web3 world. Maybe it's more natural for them than in the Web2. Of course, our buzzwords, but just to give a...
Yeah. Well, I think that's right. I think that the ways of collaborating, in the Web3 world are sort of, to use a cliche, internet native. And so, the idea of remote collaboration is sort of quite core to a lot of, the ideology and ways of working in Web3. Although I think that the thing the pandemic's done, of course, is taught everyone, like at least, even if some people are reversing out of it now, I think, in the pandemic, everyone had to learn to work remote. And so what we're seeing, even with our, kind of Web2 or whatever you want to call, general software companies, more and more are going remote first, simply because you get to tap into just a really extraordinary talent pool that otherwise would be inaccessible. I think there are real trade-offs. I'm not one of those people that thinks that there's no downside. Like, I do see the value of in-person, face-to-face interaction for, particularly at the beginning of a company's life when you're really working on like a core innovation. But I think the trade-off is real. Like, it may well, I don't think it's a binary thing. Like, you can't innovate remote or, you have to be in person. I think it's more that different companies will just move the slider, if you like, to a different point. Like, how much do you want to benefit from being able to tap into pools of talent you otherwise couldn't hire, and how much are you willing to give up in order to do that? Yeah. And, I think the great thing is that, the rise of remote is giving far more people in, a much bigger portion of the world opportunity to, be part of the internet economy that, would have been pretty hard to do even 5 years ago at the scale that's happening today.
Definitely. And what do you do when at the end of the process, if I haven't found a co-founder? First, I'll celebrate. I imagine everyone celebrate. Yeah, you didn't find it. You failed miserably. Come on, what you did? You didn't do it. Yes. How does it work, that part? Because and also, what is the percentage in general of people who find a co-founder, and how does it work?
Yeah, well, first thing I say is, like, finding a co-founder within that 12 weeks is sort of like the functional part of EF. It's sort of it's the immediate goal, but I think the important thing about EF is it's not just about that functional goal. It really is about a community that lasts for hopefully a lifetime. So I would say a few things happen. One, many EFs go and work for EF companies.
Right.
Very common, route. If you take one of our biggest and most successful companies, Omnipresent, which builds infrastructure for remote work. I don't know exactly how many ex-EFs they have, but it's definitely it's well north of a dozen. It could be 20. There's a lot of EFs there, including on their exec team. So that's an increasingly common channel, is just for people to get to the end of the program and say, you know what, my idea or my team didn't work out, but I love what these people over here are working on. I would love to go and join them. That's quite a common path. The other thing is people come back. I think one of the remarkable things to me about EF is that we recently launched a new product we call Reform, which is basically for alumni. I think we do it twice a year, certainly in London. And I think we're rolling it out in other locations, where people who are part of our alumni community and are looking for a co-founder can come back and do an intensive long weekend of re-immersing back in the community. And it's almost interestingly, I think finding a co-founder within EF is a skill, in that people seem to get better at it over time. So, we see that, we funded now a number of these Reform companies that are alumni coming back. I think, yes, there is that short-term functional goal of find a co-founder right now, but the value of EF as a community, I think, just goes on and on and on and on. And one of my favorite things to do is speak to alumni, either one-to-one or, at reunions, and just realize how much being part of the EF community has touched their lives in a very holistic way. Yes, obviously finding co-founders, but we have multiple EF marriages, multiple EF babies, people who've been, best men or whatever at people's weddings that they met through EF. And so I think just joining a community that's highly curated, highly intense, with shared goals around building things, it just creates for very powerful bonds that last for a long time.
Got it. It's interesting that you said that is a skill that looks like you're learning to how to spot a co-founder. It's like a relationship is really like that, because I was thinking, if I think about my initial girlfriends or my first wife, then I divorced, it was really a random process. You imagine when you're 17, you meet someone, hello, okay, you're my girlfriend. That's it. It's really, a data-driven process, let's say. And now you know better yourself. Or at least you're supposed to know better yourself. You have more idea of what you want to be, what you want to do. So it's a skill that you probably start to learn and get better and better. It's very fascinating, because the right co-founder can dramatically increase your percentage of success.
Well, this is where I think some of the stories and myths that we tell about entrepreneurship are not very helpful. I think sometimes we sort of project the idea that all the great companies that exist now, the founders had it all figured out at the beginning.
Wow.
And we do a lot of mythologizing of great companies' origin stories, and the reality is that most even wildly successful companies, kind of iconic generational companies, really, when you speak to people who were there, it felt to the people inside them like things were on fire all the way through. And I think it's quite unhelpful to aspiring entrepreneurs to have this image that everything has to be perfect from day one, both at the level of the company, but even at the level of the founder. I think the other thing we do is we tell these stories where the individual founders were always these superhero types from day one. And, I think even of Larry and Sergey at Google, arguably the great entrepreneurial story, along with Amazon, maybe of the last 20 years or so. And you sort of, they've done an amazing thing, but people forget the part of the story right at the start where they wanted to go and sell the algorithm to Yahoo for $1 million, right? And that would have been a ton of money as two grad students in the late 90s. But it's easy to imagine Larry and Sergey always must have had this totally crazy ambitious will of iron. It's no, that develops over time. yes, of course, there are intrinsic qualities that entrepreneurs need, but I think we forget that how much of those qualities are actually generated by the act of entrepreneurship. They're not like something that is inherent or worse, genetic, in someone. Like many more people, I believe, should give it a go to find out what they can become, rather than sort of evaluating themselves before making the decision of being like, am I good enough? Am I not? I think that's just the wrong way of thinking about the process of entrepreneurship.
I was thinking that I've always built, as I told you, small startups. And on one side, I always thought, well, I wouldn't be comfortable to try to build, Airbnb, Uber, like something big, huge. It's not in my character. And on the other side, in media, I always build, like a website with 3-4 million viewers a month. I have now a following of 3.5 million followers. So in media, I got big numbers. And I always thought, well, you know what? If I find one day a co-founder who is able to, handle the size, then probably I would change. But if I do it alone, I would never try to do it.
Right.
So it's incredible how you can be highly influenced by the people around you, and you quickly adjust and change your level of thinking. So this is I don't know how you say in English, but then the effect is a knockoff effect where
100%.
you
People
quickly
are wildly shaped by their co-founders. For me, that's one of the most special things about what we do at EF. One thing I say to every cohort when I speak to them in that first week is that the most exciting thing for me about this whole process is that for each of you, there is very likely someone in this room that's going to change your life, not just in terms of your outcomes, but actually change like who you are and your capabilities, because you're going to learn from each other in these very profound ways. And it's going to shape, everything, including your preferences. As you say, like ambition is a preference. And I think you're absolutely right that for most people, ambition is not this like fixed point like in their soul. It's like, it's contextual. Like you say, like, when you're building some things, you feel like you want to go big, and, and other things you're like, oh, I don't want to. Well, of course, therefore, when you join forces with someone that has a different ambition profile, you learn from each other. You absorb so much of the other person's preferences and, personality. I think that's such an exciting idea.
It's incredible. I've interviewed the other day an entrepreneur who launched 100 shops, physical shops. Okay, I don't know, in 1 year or something like that. And I thought, I never launched a physical shop. I never did any physical startups. And I thought, man, how did you do it? I mean, for me, it's such a headache. Also, imagine in Italy, bureaucracy, laws. I mean, I can't even breathe when I think about it. And you look at me and say, man, it's so easy. I mean, you just need to find a shop, open the shop. What's the problem? Wow. And on the other side, he at the end of the interview, he said, man, how do you do like millions of views on YouTube? I mean, I said, man, it's quite easy. I mean, it's not a shop. So it was our view was completely different. What we perceived as very hard was the opposite for each other.
Totally.
That's the beauty of having a co-founder.
And it's about getting started, isn't it? I mean, I think the thing that is in common across like building a huge following on kind of social media and opening a shop is that actually the act of doing it is what makes it possible. And on some level, that's a very banal and obvious thing to say, but I think one of the most underrated forces in the world is just agency. Like my co-founder Alice has this like phrase that she uses often when speaking to entrepreneurs, which is just most people won't. Like for any given challenge, most people won't. And so if you are one of the ones that will, that is a huge advantage just to begin with. Like, yeah, actually, I'm sure that in practice, like the guy you interviewed, opening shops probably is really hard at some level, just as I know, because I know it's really hard. Building a huge following is really hard, but it's much harder if you don't get started. And so like the act of, like the fact of agency, the act of getting started, such an important force for human progress, just generally across all fields. And I'm such a big believer in that.
It is. It is. Also because as soon as you start executing, acting, take the first steps, then you start to look at the problem. And I give you a stupid example. I had to renew my Italian license, driving license in UK. And I thought, oh my God, now the form, the thing, I was like worried, like it was impossible. And then I said, all right, I have to do it. So I just start to have a look at the form. And I start, and I think, well, it's not so hard. It's
not so bad, right? Yeah.
So it's like that. What about the mentors? How do you choose the right mentors? Because in my experience, a lot of, let's say, incubators, accelerators, programs, unless you are in Silicon Valley, Y Combinator, of course, the network is great. It's always tricky to find the right people. And some people, maybe they were part of a company and they give you storytelling that is great, but they were not really, hands-on with the company success. Yeah. So I was wondering, how do you select the mentors, and how does it work?
Yeah, mentoring is so important. I mean, I think when you speak to most entrepreneurs, they have a story. Most successful entrepreneurs, they have a story about someone who was just totally valuable at the start. So we take that very seriously. So since day one at EF, we've had a very I guess opinionated view of what mentorship should look like. So we've always had three sort of principles. So one is like the right experience. So every mentor at EF has either built a company through to exit, or has been involved from day one in building, kind of substantial companies that represent the level of ambition that we would want our founders to have. So that's the first thing. Like, I think, I'm not saying they're the only people that can be valuable, but I think if you're going to give generalist advice on company building, you really do need to have been in the trenches. I think that's sort of point one. The second thing is aligned. I think trouble with free advice is it's often worth what you pay for it. And so, one thing we do is we don't do, as a lot of accelerators do, sessions where people come from outside who have no affiliation to EF and just sort of for free volunteer to advise the startups. We don't do that because I think it's really important that when you get advice that you disagree with, which will happen often, that the incentives are at least somewhat aligned between the advisor and the and the entrepreneur. So everyone who mentors at EF is on payroll. They are incentivized through upside in the companies in exactly the same way as I am. Every mentor at EF, kind of has the same incentives to make the company succeed that the entrepreneurs do themselves. And the third
so potentially they will get a piece of equity in
exactly a sort of look through piece of equity in the company. And the third thing is, I think it has to be consistent. One thing that I don't think works at all is see one person 1 week for 15 minutes, and then on the Friday see this other person, and then next week it's this other. It's obviously good to get a diverse range of views, and clearly if you're looking for very specific expertise, you should go see an expert. But as a sort of journey of general company building, I think seeing the same person week in, week out consistently not only helps build a really deep relationship between the founder and the mentor, but it actually touches on what I think is the most important thing about advice for early stage companies, which is you don't really need advice on a snapshot. You need advice on the trajectory. An entrepreneur could tell me anything about where they are today, and I could make up some advice about what I think they should do. But what I really need to know is, where were they last week? How much progress has there been? What's the direction of travel? Is the line going up or going down? And so we've always believed that ideally the same mentor follows a startup through the time that they're at EF and follows them on the journey. And so when you take those three principles together, experience, alignment, and continuity, you end up with what we call a venture partner program at EF, where we actually have a small number of mentors in each site. We run in 6 sites around the world. I didn't mention that. So London, Paris, Berlin, Singapore, Bangalore, and Toronto. So each site has both local mentors, and then there's a pool of global mentors who take companies on this journey according to those principles. So that works really well. And then we supplement that, which I think is one of the real superpowers at EF, with just a huge global alumni community of now thousands of people with very different expertise. So like the mentors, the venture partners, they're generalists. But if you're doing something, if you want to know how to do like enterprise sales in insurance software, software enterprise sales in insurance, like, cool, go talk to one of the people at Tractable, unicorn company that has been doing that for the last 7 years. EF company, EF investors, happy to help. And, we can repeat that story times several hundred. And so using alumni as a community that wants to give back and help is also another really powerful way that advice works at EF.
It's fantastic also the multiplier effect, I think, Matt, that once you have all the, let's say, the first companies that are successful, and then it starts to compound. There is a compound interest there to in play for all the new companies that will start. We have just 5 minutes, Matt. I was curious about the next steps for Entrepreneur First. I mean, what's coming next? There is any specific project that you focus on?
So the kind of goal for EF is to be the best place in the world for the most ambitious people to find their co-founder. And so, what we want to do is be accessible to as many of the world's great founders that currently the world's missing out on as we can be. And so we've been thinking a lot about like, what does that mean? And I think the one way to think about EF is, today, we've been running for 10 years. We've basically had one product offering, which is the one I've been describing to you. That's gone really well. We've built companies worth $10 billion through that model. But actually, it suits only a very narrow kind of entrepreneur. It's ideal for first-time founders in the first sort of 6 or 7 years of their career who are ready to start right now and can make a 3-month commitment. But there are lots of great founders out there who don't fit that description. And so I think one thing you can expect us to do over the next few months as we, as going back to the first theme we talked about, as we take that capital that we've raised and invest it in our own operations, is actually start to pilot some other ways of engaging with EF that for different kinds of entrepreneurs. I think our goal ultimately is to be a platform for the world's best talent to build important generational companies. And, we think the best way to do that is to aggregate talent, bring people together in these very special communities to find the right co-founder and build the right team. So I think, the future is geographic expansion, doing this in more places. It's product expansion, doing this for more people. But it's also about being able to support our entrepreneurs for longer in their own journeys as they, go on to raise capital, helping them internationalize, helping them raise capital from the US, for example. But today, as I said, we're at $10 billion of companies created. Next goal is to get that to 100 and eventually $1 trillion.
That's great. And do you have like a major physical event, like an Entrepreneur First festival or something like that? There is a physical event where everyone meet?
Well, we do demo days twice a year for all the companies that graduate from a global cohort. We're currently debating whether to go back to doing that in person for the next one, which will be in September. They used to be in person, hundreds of people would come. It was great. They've been obviously virtual for obvious reasons for the last 2 years, but I hope we'll be returning to physical, at least in some parts of the world, fairly soon.
Fantastic, Matt. Thank you so much. Congratulations. Fantastic project. Wish you the best. And let's keep in touch.
Thanks so much for having me.
Bye.